All right, so you're thinking about selling your business and you want to present it in the best possible light to potential buyers, right? We're diving into business valuations and this thing called a quality of earnings report.
Mm-hmm.
It's all about making sure you get the best deal possible.
That's right. You've probably heard of business valuation. It's like figuring out what your house is worth before you put it on sale.
Yeah, but I've got this Forbes article here and it talks about quality of earnings reports and how they're becoming a bigger deal, even for businesses that aren't like huge corporations.
Right.
What's the deal with that?
Well, valuing a business is a lot more complex than valuing a house. It's not just about what you own, but what you're likely to earn in the future. A valuation gives you a snapshot, but a QoE digs into the details of how those earnings were generated.
Okay, so it's like going beyond the sticker price and looking under the hood, so to speak.
Exactly. And for buyers, especially when we're talking about larger businesses that might not have, those squeaky, clean, audited financials, it's about reducing risk. They want assurance that the numbers are solid and there won't be any surprises down the road.
Gotcha. But I'm the seller. Why would I want to pay for this extra report? Seems like I'm just creating more work for myself.
It might seem that way, but think of it as a strategic move. A QoE can actually help you get a better price. You're essentially preempting those tough questions a buyer's going to ask anyway. It shows you've got nothing to hide and builds a ton of trust.
So it's about transparency and showing I'm serious about selling a healthy business.
Absolutely. The Forbes article even mentions that it can help you avoid those dreaded price reductions or retrades during negotiations. Imagine you're deep in talks and the buyer suddenly finds something they don't like in your financials. That can really derail things.
Ouch, yeah. I can see how that would be a nightmare.
Exactly. A QoE lets you address any potential issues up front before they become deal breakers. It's like having a financial expert vouch for the health of your business.
You're not just selling a business, you're selling confidence in that business. I like that.
And that confidence can translate into a smoother negotiation process and potentially a higher sale price. A valuation tells a buyer what they might pay. A QoE gives them the confidence to actually write the check.
I'm starting to see how valuable that peace of mind can be, especially for a buyer looking at a larger business.
Exactly. Think of it like this. You're selling a used car. A valuation is like telling the buyer the make, model, and year. A QoE is like providing a detailed inspection report from a trusted mechanic.
Okay, that makes sense. But let's say I'm convinced and want to get this QoE done. What's the process like? Who actually puts these reports together?
You'll want to work with an independent accounting firm that specializes in mergers and acquisitions. They have the expertise to really scrutinize your financials and dig into the details.
So not something I'd want to try to DIY.
Definitely not. It requires a deep understanding of accounting principles, financial modeling, and industry benchmarks. You need someone who knows what buyers are looking for and can present your financials in a way that highlights the strengths of your business.
Okay, so finding the right expert is key. But beyond potentially getting a better price, are there any other benefits for the seller?
Absolutely. The process of preparing a QoE can be incredibly valuable in itself. It's like a financial health checkup for your business.
Interesting. So it's not just about satisfying the buyer, but potentially improving my own business.
Exactly. The analysis involved in a QoE can uncover things you might not even be aware of.
Like what? Give me an example.
Let's say you have a product line that you think is performing well. A QoE might reveal that it's actually not as profitable as you thought, maybe due to some hidden expenses or inefficiencies in the production process.
That's a great point. It's easy to overlook those kinds of things when you're, caught up in the day-to-day running of your business.
Exactly. A QoE can help you pinpoint those areas and address them before you even start talking to buyers.
So it's about getting ahead of the game and turning potential weaknesses into strengths.
Precisely. And by doing so, you're not only increasing the value of your business, but also creating a smoother and more efficient sales process.
This reminds me of that saying, an ounce of prevention is worth a pound of cure.
Couldn't agree more. And in the world of business sales, that ounce of prevention can translate into a significant financial gain.
We've talked about the benefits for both the buyer and the seller, but let's be real for a second. These reports probably aren't cheap, are they?
They can be an investment, that's for sure. But as with any investment, it's about weighing the potential return.
Okay, I see your point. If a QoE can help me avoid a price reduction during negotiations or even help me get a higher offer, the cost could easily pay for itself.
Exactly. It's not just about the cost of the report itself, but the value it brings to the entire transaction.
I'm starting to see that a QoE can be a powerful tool in the sales process.
It's all about positioning your business for success.
Okay, so let's say I'm ready to invest in a QoE. What are some of the things I should be prepared to share with the accounting firm? What kind of information are they going to be looking for?
They'll need a deep dive into your financial records, of course. Things like income statements, balance sheets, and cash flow statements for the past 3 to 5 years are essential.
Okay, that makes sense. Anything beyond the basic financials?
Yes. They'll also want to understand your revenue streams, details about your customer base contracts, pricing models, and anything else that impacts how you generate revenue.
So they're really trying to get a comprehensive picture of how the business operates, not just look at the numbers in isolation.
Exactly. They'll also want to analyze your expenses, everything from salaries and rent to marketing costs and raw materials. They'll be looking for anything unusual or that needs further explanation.
So it's about transparency and being able to justify every line item.
Precisely. And the better organized your records are, the smoother this process will be.
This is making me realize how important it is to have a good handle on my financials, even if I'm not planning to sell anytime soon.
Absolutely. Solid financial management is essential for any business, but it becomes even more crucial when you're preparing for a sale.
Okay, so let's shift gears a bit. The Forbes article mentioned that sophisticated buyers are often skeptical of seller-provided valuations. How does a QoE help bridge that trust gap?
It all comes down to independence. The QoE is prepared by a neutral third party, not by the seller or their team.
So it's like getting a second opinion from a doctor you trust.
Exactly. Buyers, especially those experienced in M&A, understand the value of that independent perspective.
It eliminates any questions about potential bias in the numbers.
Precisely. It levels the playing field and provides assurance to the buyer that they're getting an accurate and objective picture of the business's earnings.
Okay, so we've covered a lot of ground here. The rising importance of QoEs, the benefits for both buyers and sellers, what to expect during the process, and even how it can boost a buyer's confidence in the deal.
It's important to remember that each business sale is unique, and the decision of whether or not to get a QoE is a strategic one. But as we've discussed, it can be a valuable tool to maximize value and increase the likelihood of a successful sale.
So for anyone out there thinking about selling their business, adding a quality of earnings report to your checklist might be a smart move, especially for larger businesses. It's all about presenting your business in the best light and getting the best possible outcome.
Well said. Being well-informed is critical in the world of business, and that knowledge can make all the difference.
Knowing all of this, how would you approach selling your business? Would you see a QoE as a worthwhile investment? Food for thought as you navigate this exciting but complex journey. Until next time, happy deal making.